Hey, good morning, everyone. What's up? Happy Monday, starting a new week fresh here. It's August 25th. Hope everyone can hear me okay. Morning, Jack. Morning, everyone. Doing the weekly market prep. This week we've got a full week, but next Monday markets are going to be closed, so we're going into a long weekend. And the first things that we do want to jump into is how the week ended last week, right? On Friday, we had the Jackson Hole Symposium with Jerome Powell speaking. We can take a look at some of the breakdown of that, as well as the news that's expected this week, and then I'll leave you off with a breakdown of what we got going on in terms of market movement to start things off, because there's a lot of interesting flow that happened on the overnight, specifically on NASDAQ. So first and foremost, let's wrap things up from last week, I should say, with the Jackson Hole. Friday, we saw that Jerome Powell spoke. We had a breakdown of the annual Jackson Hole Symposium. Jerome Powell took center stage. Everyone was watching him on Friday. Effectively, he did open the door for a sooner rate cut. You can see here, this is from FedWatch Futures from the CME Group. You can see the breakdown of the probabilities of rate cuts for the meetings that are expected to come out. So this current meeting that we have in September, you can see the breakdown here, 83% chance of a singular 25 basis point cut. And you can see the probabilities from weeks ago, right, a month ago, so on and so forth. So this probability had fluctuated. I believe it was like last week or 2 weeks ago when we had the CPI data. At one point, it was like nearly 100% that we're actually going to get a cut in September. That dropped down to about 70% going into the Jackson Hole after the PPI. Now it's back to nearly 85%. Still 70% plus, like we're pretty much pricing in that 25 basis point cut. Anyways, he did talk. Powell did talk about the balance of risks has shifted. Inflation risks are now tilted up slightly, but employment risks are tilted down slightly. And with policy still restrictive, the outlook may warrant adjusting our policy stance. So, giving a few little hints there that we'd see cuts, I guess, in the next meeting, which is pretty much what was expected, but nothing too aggressive, which allowed markets to rip pretty aggressively on Friday, right? Pretty much just rallying in the first 5-10 minutes after Powell sat down, started speaking, and then just stayed into those highs until the close of the session. So, bleh, excuse me, that was that was pretty much pricing in the September cuts. He also stressed flexibility, not a preset path. Monetary policy is not a preset course, and decisions will be made meeting by meeting basis on the data and the evolving risk balance. Markets liked this risk management tone versus a hard anti-inflation stance, where he's pretty much said in the past, "Oh, okay, we're going to be data dependent. Inflation is very hot. Inflation is very high. We don't want to get too aggressive too early." And then markets look at that as, okay, no cuts coming. But this time he kind of shifted gears a little. Now, was it him shifting gears because there was a lot of pressure within the Fed itself? You can see some of the dissenters. We had Christopher Waller and Bowman. They both were against keeping rates as is in the last meeting. And as the weeks went by, you could see more and more Fed speakers started to kind of gain more of a, I guess, wanting to cut stance rather than something neutral or keeping rates as is. He underscored progress on inflation and cooler labor markets. Inflation has come down a great deal from its peaks, while unemployment has risen about a point from the lows. Unusual outside recessions, which justifies easing off the brakes. He also unveiled a tweak policy framework but kept 2% inflation. The Fed published a revised statement on longer run goals and monetary policy strategy. Key takeaways are keeping the 2% inflation target, avoid a numerical jobs target, and balance deviations from both goals over different time horizons, meaning not a single minded on inflation only, right? That reinforced the dovishness. And with that, we had a push to the upside, Powell taking a slightly dovish stance last week, which cleared things up for that upside movement. Now, going into news for this week, some of the things that you want to be aware of here. This is from Forex Factory. You can go and check their calendar out. But today, we have some new home sales that come out at 10 a.m. Eastern Time. Not the biggest of deals. But going into Tuesday, again, some orange folders where you do want to keep in mind when they are. There could be price blips at that time. You have pre-market, some durable goods. 10 a.m., you've got some CD consumer confidence, some Richmond Manufacturing Index. And then on Thursday, pre-market, prelim GDP quarter over quarter is something that traders would really want to make sure that they are aware of, right? Pre-market, you also have the unemployment claim. So at 8:30 on Wednesday, expect some movement, some jumping around. And on Friday, Thursday. And on Friday, the big report, pre-market, the Fed's favorite inflation gauge, the core PCE, comes out at 8:30 a.m., one to watch 100% before we get into the long weekend. Now, what is going on with these markets? Here, if we pull this over, this is NASDAQ. Now, we've got some crazy stuff going on NASDAQ. Monstrous negative delta all throughout the overnight session, pretty much starting around, what time was this? Like 4:20 a.m. Eastern time. You have monstrous orders of negative delta, right? 600s, 800s, right? 600, this is delta, so it's the difference. 400, and right now we're trying to hold this support structure here with this monstrous negative delta into the lows. You can see these negative delta, volume profile expansion pieces here that stick out super aggressively. Negative 700, negative 750, negative 825, negative 1,090 into this low around 470. This is some continuous aggressive selling against some passive buying that's shaping up. And what we see is a pullback from the Friday rally due to Jerome Powell and the Fed. You're seeing prices start rotating back down with some repositioning, some profit taking, and this is monstrous size. What does this tell us? This gives us kind of an ultimatum in price action right now on NASDAQ. As long as we maintain under these areas, you're going to see the attempted continuation to the downside swing. Now, I see this as more of a reposition before the week sets up where we could see that continued downside. So what does that look like for us? Now, one of the key factors is all of this aggressive selling against that buying happened at 23,515 here on the NASDAQ. So that opens up a move into a balance to the downside, which puts bearish pressure, which suggests that under 23,515 on NASDAQ, you have the expectancy to see that sell side try to tackle 430 and even down into 330. So Friday, it leaves the whole session with this long tail on a P-shaped volume profile with super thin volume. All that thin volume tells us is that this is an unfinished auction and we don't really necessarily know how strong these buyers are off a news pop like that. So it would make sense for some of these sellers to try and trigger and trade and test some of that, which is exactly what's happening here pre-market. So on the buy side, right, how this would want to continue on the buy side, honestly, the best case scenario right now, instead of me trying to find where these dips are, is if we can bid aggressively above 23,515. That's what changes the course of the NASDAQ today. That is where the buyer is set out. If we can't bid through that, right, you can look at these little pullbacks at 430, 330 to find some buyers. But under all of this selling and all this volume that came out on the pre-market, you got to be extremely careful with trying to buy some of these dips. There's huge areas of resistance on the upside swing, and that really gets put out once we bid above 515 on the NASDAQ. And if we can sustain above that, you have an immense support to see if we can target upside prices. So I'm not super confident in the buy side going into this week unless that 515 goes crazy bid. So with that being said, let's jump into our live trading room this morning. I'll see you guys all there. Check out community.tradeproacademy.com. And we should be doing Power Hour this Wednesday. We'll update you guys. You'll see it on YouTube. And I hope you have a fantastic